If you're trying to find setups as easy as that, this is the video for you. So we're going to go ahead and start with the 4-hour time frame. Mark out your swing points. So you swing low, you swing high, mark them out. We have to understand what is our bias, right? So I'm going to go ahead and start marking out what I currently see. We broke structure to the downside. That's what created these 2 swing points, right? That's where we're paying attention to. So what happens between these 2 swing points obviously is going to help lead us to our overall bias for the week, right? Because remember, we are on the 4-hour time frame. Now the expectation is if it broke structure to the downside currently, then that's what it's gonna do. It's gonna respect these 2 swing points. If it follows naturally, right, this is going outside of, because right now there's been a lot of news, but outside of news, naturally it should return back as it's doing its pullback. Some people may enter on that pullback, but I rather wait until it pulls into that area, right? And once it pulls into that area, then we can start looking for an entry. Now that we have an understanding on that, let's go ahead and let this play out just a little bit. All right, it's pulling into our area. Now we could go ahead and hop into the 15-minute time frame. Now what we're looking in the 15-minute time frame is so simple. We're still looking at structure. That is the main point. Same thing what we did in the 4-hour. We're trying to understand where the entry is going to be at. We're trying to slowly analyze the market so it can kind of give us those hints, so it can show us their cards and show us, all right, this is where the market's going to start confirming with the higher time frame. You want to get the mid and high time frame to align. That's what you're aiming for. So right now it broke structure to the upside. Beautiful wicks. I kind of like that. I mark out the low there. I want to see it break that low. It can respect it. Beautiful. Love it. But I want to see it break it. Now that it broke it, now we can go ahead and mark that out. Let me just mark that out correctly how I would normally do it. And some people, have their own preference in how they do it. I just like it like this. So let's go ahead and now look at the 1-minute time frame. Now I'm going to go ahead and let it play out. But the main objective here is we're trying to look for order flow. We already have the bias, higher time frame, mid time frame. We're already looking at the bias in terms of the market structure. It's aligning. Beautiful. We have an idea of where the market's going to give us our entry. All we need to look for now is order flow. We need to find proof that it's going to go in that direction from a supply and demand standpoint. So at this point, remember, we're looking for an overall selling opportunity. So we're looking for supply to be in control. We need to find where supply is going to give us that entry. It may respect it here, it may not respect it there, but then it'll respect it again. See, right now it's running from us. That's fine. That's fine. But there's a couple supplies. If you look very closely, there's a couple supplies along the way that maybe some people took an entry. Maybe some people made their money. But me, how I do it, I'm trying to look for the highest probability entry and the safest entry, in my opinion. So I'm going to just speed up the process a little bit, let it play out. I would mark them out here and there just for you guys to see it, but in reality, I wouldn't take them. I prefer to look for a high probability entry such as this, but what the heck, why not just mark it out? Because I know a couple people are already probably screaming like, oh, well, Fabian, there's this, opportunity right here, right there. Well, there's a lot of opportunities. Doesn't necessarily mean you should take every single one of them. For example, here, the supply played out beautiful. Demand reacted, but it didn't give us a supply to re-enter off of afterwards, right? At least to follow my plan. So going back to what I had said in the other video previously, chase the habits, don't chase the trades. So here, I'm looking for it to play into the supply. It's going to play around a little bit. That's just the part of the process. It's generating liquidity and then sweeping liquidity. That's all it's doing. That is absolutely all that it is doing. You just have to be very, very patient. If you want that high probability trade, you're gonna have to be very patient. So let's just let it play out for a little bit, and it's slowly getting its way up there. All right, it's breaking structure to the downside. Beautiful. All right, it's getting slowly, little by little. Okay, it taps into it. Perfect. Now we can start looking for our entry model here. What is our entry model? We're looking for a transaction. If you don't know what a transaction is at this point, that's just us trying to understand who's in control, supply or demand. That's all it is. Right now, demand showed its cards. It reacted to that demand. We want to see that. It's reacting to it. Then it plays into that supply. And then beautifully, it comes back, reacts to it again. It blows through it. When you have a situation like this, that's where you can go ahead and start finding out where the next supply is going to be, where the next run is going to be at. So how I view it, right there for a perfect example, it reacted to it 2 different occasions. So I'm looking for an entry kind of similar to that. That's textbook right there. You know, some people may look at it probably a little bit different. I get it. But how I see it, this is probably the most textbook setup that I've had in a long time. And I was actually really happy I was able to catch this trade because it was really quick how it just set up. It didn't give me like damn near no time. And this is probably why a lot of signal providers are just not as it used to be. Look how quick that was. Gave you 2 minutes, if that, to come to the decision to enter that trade. So I'm just going to go ahead and mark out my fib. There's so many different ways of how you can do your fib. You know, it's honestly up to you guys. I like to just go for it all. I like to aim for the low, at least as a sweep of that low. That's what I ideally like to look for. You can do it however you want to do it, but honestly, this is the best way. And I hope this video has helped you guys, maybe broke it down in a way that maybe you guys didn't view it in this way. Maybe it opened your eyes. Maybe it opened you guys to more questions. Maybe you guys learned something in this video that it just got you a little bit closer to developing your edge into possibly becoming a profitable trader or with your own live account or with a prop firm. I hope that is the case. If anyone has any questions, you're more than welcome to reach out to me. Like I said, guys, number one rule with trades like this, don't be greedy. Don't be greedy. You just want that small piece of the pie in the market. There's trillions of dollars in it. All you need is a small percentage. Make your money and get out. Stay profitable.